Recently, international stock markets have been turbulent, with Japanese and American stocks rebounding after a sharp decline. On the domestic front, there was no continuation of last week's strong rebound from the bottom. Instead, it fell back to near recent lows, signaling the next wave of volatility. By the end of this week's trading session, both the Shanghai and Shenzhen indices broke below levels seen since 2 months ago. The style differences are no longer as pronounced as last week, and the market has returned to a state of chaos. Further downside risk. Not possible. When it comes to strategies to hedge against stock market downside risk, we must mention market-neutral strategies. This is a strategy that involves buying a basket of stocks, shorting the corresponding index futures, and capturing the difference in returns between individual stocks and the index. It can effectively hedge against overall market downside volatility, focusing on capturing the returns generated by individual stock selection. It is worth noting that although market-neutral strategies logically avoid the risk of stock index declines, their profitability still depends on market activity and the magnitude of individual stock fluctuations. Furthermore, in order to achieve returns that outperform the index, market-neutral strategies often do not. This results in holding fewer stocks, forming a prolonged exposure to risks will inevitably bring about risk. While the other environment relies on market risk strategies, little consideration is given to another important issue. As hedging costs fluctuate with market conditions due to shorting through stock index futures to hedge risks. From the points I mentioned earlier, the current environment is not the most likely opportunity for market-neutral strategy allocation. While the other hedging costs are definitely on the low side, the more important factor is that the current market is characterized by low activity and bias. This makes it difficult to excel in stock selection at the long end of a neutral strategy. As a result, most recent market-neutral strategy products show slight inaccuracies, while some associated high-risk stocks perform relatively well in terms of valuation.